Let's start by talking about the Malaysian economy. I don't think in the short term, which means the next coming quarters, but the Malaysian economy will be insulated from the impact of COVID-19. In fact, we do anticipate that the growth of the Malaysian economy will be also softer in light of the pandemic. But I think, having said all that, the Malaysian government has been very quick in coming out with a stimulus package of a quantum of about 260 billion ringgit to ensure that businesses and consumer sentiment will rebound in the coming quarters to come, to make sure that basically the unemployed have some money to spend, that the SME businesses are well supported, and that essentially over the months to come that we will be able to see a recovery in the Malaysian economy from a very sharp deceleration in the second quarter. In Indonesia, we are a little bit more cautious on the equity market there, simply because I think that the currency impact from this pandemic has been fairly severe. It's quite comparable to where we were before in the Asian financial crisis when we retested the 17,000 rupiah levels. The government has been moving very quickly in the last few weeks to ensure that they raise a lot more in terms of bonds, in ensuring that they'll be able to support their local economies. And we are hopeful that the recent pandemic bonds that they've issued will continue, and that will help a lot of its SMEs as well as in unemployed people across the country. We are also hopeful that they're able to contain, or as they say, flatten the curve of the pandemic curve, and therefore the spread of the COVID-19 cases will start to taper off in the weeks and months to come. In Thailand, similar situations like Indonesia and Malaysia, the economy is not spared as well, especially the tourism industry, which accounts for more than 10% of its economy. I think the short-term deceleration growth is well anticipated, but the government also has been very quick in terms of coming out with some form of fiscal stimulus of about 12.3 billion US dollars. Recently, it came out about close to about 5.6 billion in terms of a pandemic aid that basically focuses on the farmers in the upcountry areas, and we think that although they may suffer in terms of deceleration in growth in the coming quarters to come, but because Thailand has a fairly good current account surplus, it has ammunition for itself to able to come out with even more bigger fiscal stimulus over the months to come. And so we are hopeful that Thailand will be able to recover fairly quickly from this in the short to medium term. So in ASEAN, our strategy is also fairly defensive in the individual markets that we invest in. We think that we need to continue to monitor the deceleration in growth, the number of cases that are starting to taper off a little bit. But having said all that, I think the corporate earnings season that's upcoming is something to watch out for. We do anticipate they're going to disappoint in the shorter term, and therefore we will take the cue from there to evaluate our strategy from there. The roadmap to the current crisis are the following. The first phase is where we are today, where basically the number of cases are starting to improve, both in the developed markets as well as some of the Asian countries that we invest in. The second phase is where you start to monitor basically a gradual opening in terms of the economies. And I think the risk there is that we need to monitor basically if you start to open up too early, whether the risk of a second phase may happen. And obviously the last phase is where you open up the economies completely once you find a vaccine. In conclusion, we believe that a diversified, disciplined, and long-term approach to investing is the only way to grow your assets over the long term. On a short-term tactical basis, we are basically tweaking our asset location to favor 50% in equities versus 50% in fixed income. And within the equity space, we continue to favor large cap, basically defensive growth companies that are able to weather into any form of downturn in the markets. For our conservative clients, we do recommend more of our conservative bond funds, for example, or our balanced income funds, which are generally income in focus. For our more aggressive clients, we do recommend you to think about outside of Malaysia in terms of the exposure towards the Asia Pacific equities, for example, basically funds which are geared towards global REITs, for example, or even if you're a little bit more high risk, you may think about our China related funds as well as our technology funds.